Facebook parent company Meta releases its earnings today and drops 20%. It drops 20% in the aftermarket trading right now. Right now, Facebook is down 22%. The last time I looked in the aftermarket's trading, and that's because they released their earnings. So is this a great time to buy Facebook? Has the market overreacted to Facebook, or is Facebook in some real trouble? The only way to find that out, ladies and gentlemen, is to go through their financial reports. So today we're going to go through we're going to comb through their earnings to see if there's an opportunity or has the market overreact. But ladies and gentlemen, boys and girls, and children, ladies, if you haven't done so already, go ahead and make sure hit the subscribe button, hit the bell icon, hit that like, comment, and share button. Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, this is your greatest host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time. So we are going to jump straight into it. So, ladies and gentlemen, we've seen it today. If you haven't seen it today, Facebook right now, currently in the after hours market, is down 22% after releasing its fourth quarter earnings for 2021, its annual earnings. We're going to go through, we're going to find out why. And it's only one way. We're not going to read the headlines and say what the headlines said and what somebody else said. We're going to look at the financial reports. All right. So without further ado, y'all give me a second to pull up these financial reports. Let me get this banner off. And if you are catching this live, come on through and say hello. Let's see where I'm at here. There we go. I'll give me 1 second. I'm pulling up these financial reports so we can go through them live. All right. You know what? Let's go through here. This seems like it might be a little bit better. All right. Here we are, ladies and gentlemen. There we go. So right here, we have Meta's reports fourth quarter and full year of 2021 results. And as you know, Meta is the parent company of Facebook. Facebook changed its name from Facebook to Meta, essentially, as it gets ready to prepare and to head into the metaverse. So let me blow this up. I'm on the investor relations on Facebook. It said, we had a solid quarter as people turn to our products to stay connected and businesses continue to use our services to grow, said Mark Zuckerberg, Meta founder and CEO. I'm encouraged by the progress we made the past year in a number of important growth areas like Reels, commerce, virtual reality, and we're continuing to invest in those and other key priorities in 2022 as we work towards building the metaverse. So that's the first thing they said there. Now, here's some key indicators, right? Here's some key indicators. Here's the 3 months ending in December 31st compared to 2021, compared to 2022. Total revenue last year was $28 billion, right? This year, it is $33 billion that they made in the third quarter. The total cost of expenses was $15 billion. This year was $21 billion. The income from operations, this is the total revenue is all the money they brought in 3 quarters, all the money they brought in. Then the total costs and expenses, things that cost that money had to go out. The income from operations, this is the income that's coming in before taxes, right? In 2021, they made $12.585 billion. And in 2020, they made $12.775 billion, a little bit higher, right? Operational margin, it was 46% last year. This year, it is 37%, right? So you can see this. As you can see, the operational margin was higher in 2020. It was 46. This year's 37. What does that tell me? So as you can go back up, you can look in 2020, they made $28 billion. But out of that $28 billion, they lost $15 billion. They was able to keep $12 billion for themselves. Last year, they made more money. Last year in 2021, they made more money with $33 billion, but their total costs and expenses increased. So you had an increase in total costs and expenses. So even though they made more money last year, their total costs and expenses was more money. Now you can see they went from $28 billion to $33 billion. That's a $5 billion difference, but their total costs and expenses went up $6 billion. So this is where you can see the operational margin change. This is important because this is going to be hit on later on when they're going to say this is the cost of goods and services. Remember that 7% inflation? So that 7% inflation, it hurts how much money the company can actually bring in. Even though it can make more money, the price of goods and services, depending on the business they're in, can hurt the operational margin. Let's continue on. So provision for income taxes, they put back $2 billion. Okay. Effective tax rates. So there's in a higher tax bracket at 19%. So look at the net income. See how this affects you? Down here at the net income in 2020, even though they made less money in 2020, their net income after taxes was $11 billion. This year, it was only $10 billion. See right here, it says $11 billion was their net income in 2020. This year, their net income was only $10 billion. A lot of this can be contributed to, as you can see up here, the total cost and expenses of the money that they brought in. So right here, that goes down to earnings per share. Leads us to our first not there. Let's take a look here as I put it in here. What I want to put this banner here, EPS. EPS is earnings per share. So how many shares that are out plus how much you're earning. So you kind of calculate this by dividing the earnings, and then you can do how many shares you have to come up with an EPS. Let me see what y'all say in the comments. Brawless, let me see. Brawlers Occasion said, what's good, OG? Brawlers Occasion, what's going on? Thank you for catching it in live. Practical Investing says, Load the boat. I'm sorry. I mean, I need to have my glass on, these lights here. I can see it said load the boat. So he's saying, hey, is this a good time to buy? Is it a good time to jump in? We're going to look at this, right? So as we can see, ladies and gentlemen, you can see right here the earnings per share. In 2020, the earnings per share was 3.88. This year, the earnings per share was only 3.67. Ouch, right? So right here, I got it pulled up. What was the expected? So every quarter, they expect the earnings to be a certain thing. Earnings was 3.67. There was expected to be 3.84. So there you go. They miss on earnings per share, right? So that's the first thing they're looking at. Now let's go down to the full quarter operational financial highlights. Now they look at the DAP. That's the next one I'm going to pull up for you guys and girls. Let me pull up the DAP. These are the, I didn't put them in here, but okay. These are your daily active people. How many people are active on family daily active people? How many people are active on your platform every day? The DAP was 2.82 billion on average for December, an increase of 8% year over year. The MAP, this is the monthly active people. MAP, it was up 9%. Then you got the family, the Facebook daily active user, the DAU. It was up 5% year over year. And ad impressions was a little bit up. You got capital expenditures. They were okay. Now, here's a key indicator. You asked me, hey, Prince, is it time to load the boat? My first question is, what is the company doing? What is the company doing? Right here, share repurchase. We repurchased 19.18 billion and 44.81 billion of our Class A share stock in the fourth quarter for 2021, respectively. As December 31st, 2021, we had 3.879 billion available and authorized for repurchase. So it's a good sign when I see a company buying its own stock, because it believes when a company usually buys its own stock, it believes that its stock is undervalued. So to see this stock has dropped 20%, that means that Facebook itself, all the stocks that they purchased, they lost 20% too. So if they purchased 19.18 billion dollars worth and 44 million, quick math off the top of my head, that's about 64 billion. 20% of 64, I'm going to roughhouse it and say about 5 to 10 billion that they probably lost, if not more, right? That they lost in the aftermarket of value. They didn't lose any money until you sell, that they lost some value. Now let's look at how much money do they got in cash. Cash and cash equivalent marketable securities were at 48 billion as of December 31st. So they have 48 billion dollars sitting in cash. 48 billion dollars sitting in cash. This company purchased 64 billion. To make sure I got that number right. 60 approximately about 64 billion of its own stock, and it has 48 billion dollars in cash. $48 billion sitting in cash. How many companies have that sitting in cash? Head count was 71,970 as of December 31st, an increase of 23% year over year. I'm not sure on head count. I'm not going to act like I know what that one is. I'm not sure on that. So right here, this is what people are looking at that they missed out on, or that Facebook is messed up on. So they're looking at the revenue. They're saying that, hey, Facebook missed on revenue. So revenue was 33.67 billion versus the 3.4 billion expected, according to Redfin TV. So here we go. You got revenue. They did beat on revenue. So here we go. The total revenue right here is 36. You can see for the fourth quarter, it was 32. I'm sorry. There we go. 32 billion. I think they're talking about for the year. Let me look at what was their year. No, they made 114 billion for the year. So let's take a look. They made, for the fourth quarter, they had 34 billion for the year, bringing them to 114 billion. Then you look at the other revenues that they had. See, look at it. All their money is coming from advertising. 32 billion dollars made in the third quarter. They made 114 billion dollars in in money generating coming in. So they had the family apps, they had the reality labs. Their total revenue was 33.6 billion. There we go. That's my number. So the total revenue was 33.6 billion, and they expect it was 30.4. So the revenue, they would slightly beat revenue a little bit. So in 2021, for the whole year, they made $117 billion in total revenue. Man, that's a lot of money. So here we go. Income loss from operations. So once they made all their money in, how much money went out? For the quarter, $12 billion went out. For the year, $32 billion went out. Now, here is what everybody's talking about, some of the headwinds that you're hearing everybody talk about that people are worried about with the company. We're going to write the word headwinds, as you're going to be able to see. This is coming from the CFO. The CFO is the Chief Financial Officer. He said, we expected the first quarter 2022 total revenue to be in the range of 27.29 billion, which represented a 3 to 11% year over growth. We expected our year over year growth to be first quarter to be impacted by headwinds to both impressions and price growth. So, and price growth is another fancy way of saying inflation, right? So on the impression side, we expect the continued headwinds from both increased competition for people's time and the shift of engagement within our app towards video services like Reel, which monetize at a lower rate than the feed and stories. So right here, they're saying, when I actually listened to the call, Mark Zuckerberg, the number one company he brought up was TikTok. He said, hey, TikTok is coming in. TikTok is changing the way. But with Facebook, they're using Reels. Reels is their way of getting around TikTok. But they're saying, hey, more people are watching TikTok. People don't want to watch these long videos anymore. People like that 5-second, 10-second, 30-second bite that they can do, that you're seeing YouTube even going to. I put up YouTube stories, 15 seconds, 60 seconds. People want to get straight to something, right? Versus you're looking at, not versus what you're looking at, but versus what Facebook is doing. They're saying, hey, yes, we're going to this real thing, but you make less money with the short videos. Second, we see a long period of demand in our prior years. He said, we see a long period of strong demand in the prior years. We're hearing from advertisers and micro challenges like cost of inflation, supply chains, distributions, or impact of advertisers' budgets. So advertisers are not spending as much money, pretty much what it boils down to. Advertisers are not spending as much money, and they're not making as much money as Reels. Finally, based on current exchange rate, we expect foreign exchange currency to be headwinds into our year over year. So the dollar is very strong. When the dollar is strong, it can buy less overseas. When the dollar is strong, other currencies are weaker. So people overseas, when they convert to the dollars, companies that are overseas, they usually buy less when we have a strong dollar. So they're looking at that as a headwind, that having a strong dollar compared to other currencies. When people convert their money, foreign companies, they buy less. So, in addition to previous noted, we are continuing to monitor developments regarding the visibility and the transactional data transfers for their impact on the European operations. We expected our 2022 total expenses to be in a range of 90 to 95 billion dollars, updated from our prior outlook of 91 to 97 billion. Our anticipated expense growth is driven by investments in technology, in technical and product talent and infrastructure costs. Right. So let's see what they're saying here. So the Meta, they're expecting their capital expenditure, including payments of finance leases, to be in a range of 29 to 34 billion dollars, unchanged from prior estimate. Okay, that's good to go. So now the ticker symbol change is going to change to Meta. So Meta Class A stock is expected to begin trading on the Nasdaq under the ticker symbol Meta in the first half of 2022. This will be replaced our current FB symbol, which has been used since the company was an IPO back in 2012, and so on, so on. So these are a couple of things that I wrote down here. So you heard them bring up competition. The competition has gotten stiff for them, so that's been hard for them, right? Also, um, Facebook is coming out with glasses and headwear this year. Shout out to Facebook. They're coming out with glasses and headwear this year to prepare as they're investing more money into the metaverse. So a lot of money is going into the metaverse. You're going to be able to put glasses on for Facebook, and you're going to be able to put on headgear for Facebook as well. So that's one of the things that I picked up by listening to their call. And they didn't announce, they've been having a partnership with Uber for a while. So that wasn't anything big. Now look at this. People say, is this a time to buy? My personal opinion is Facebook announced last year they was going to do Meta. And I believe that now their infrastructure is faced on this whole Meta thing, metaverse, going into the metaverse, and they're leaving behind the 2.0 web version, and they're putting their focus into Meta. They're making big investments in the Meta. I look at them as, yes, I think it's a time to load up the boat. I think it's a time to load up the boat. I don't know which ones I got in here, but to load up the boat on them. Why? Because based off of, when I look at the finances, the company reported $48 billion sitting in cash. You know, not too many companies walking around with that type of cash sitting around. Now, let me see. Let me get this out of the way here. Where else we got here? I want to pull this up. I'm going to pull up their whole entire. We're going to look at their bank account here. I think it's probably at the back of this, at the end of this page here. Let's see here. Let's see if I can get it here. Okay, here we go. Now their net income. They talk about their net income. Now this is their income statement. Now let's go to their balance sheet. Total current assets. Their total assets. They have $165 billion in assets. That's a lot of money, ladies and gentlemen. Total assets, $165 billion in total assets. Now let's look at their total liability. Total liability got only $41 billion in total liabilities, bringing their net shareholders' equity to, if you subtract their net worth, all their assets, 165 billion, subtract out $41 billion, they are sitting at 165 billion, $124 billion in net worth, right? Their retained earnings is of $69 billion. So financially, Facebook is a juggernaut when you look at them. The only problem is they make all their money through advertisers. And with all the new competition that's coming along, will Facebook survive as they are betting big and moving into the metaverse? The real question is, do you think Facebook can get into and really not prophesize, but profit from the metaverse? And they made it clear, abundantly clear. I heard Mark Zuckerberg on a conference call today. He said, we are not going at this alone. We're going to partner with people. People thinking, oh, Facebook is going to go out here and create all these currencies. No, they're looking to partner with people who's already in the space. And guess what, ladies and gentlemen? They got the money to do it. So the total current assets, if you take the total current assets, meaning money they can convert to cash within 12 months or less, $66 billion. Do you guys hear that? $66 billion. How many companies are walking around with $66 billion in current capital? Now you look at not even their current liability. Let's look at their long-term liability. Their current liabilities, total current liabilities. Other lie. Okay. So the total, okay, they have $66 billion. Their total liabilities is only $41 billion, meaning they have enough money in their bank account to pay off all of their total liabilities. They can pay off all of their total liabilities with current assets, meaning that if they paid off all their bills, they will still have $25 billion left over. That's all, not their current, but the total, everything that they owe right now, they can pay it out of their bank account, out of their current bank account, checking account, and pay for all of that stuff, what they owe. That's why they're looking to expand. Companies that have this much cash and capital on hand, they look to what else can we do? What else can we do? That's where they come out with the headset, the glasses, the metaverse, moving into the metaverse, dating, people going to be dating, all the other stuff they're looking at going to Web 3.0. The big thing is, do you think Facebook will be the one? With the world, when Facebook first came out, it was kind of by itself. But now you have all the competitors. You got TikTok. They just mentioned TikTok in their conference call. So when you look at that balance sheet, the balance sheet is of a juggernaut. I think the market overreact. But the downside is, do you think Facebook can get a hold of the metaverse? That's really boils down to, ladies and gentlemen. And they reported $48 billion in cash. So right there, let me see what y'all say in the comments before I get ready to roll out of here. I don't think I know what this, Ninja, I don't know what that is. Nejan, I don't know, something sister LOL online. I don't know what that is. Voter, I can't read that either. I don't know what that is. So anyway, ladies and gentlemen, hopefully y'all got something out of this. This is Facebook's earnings. They released today, 22% drop in the stock as people get scared about their revenue, their daily active users account of declining, and or whatever. Broad education, you're right. He said perfect time for leaps. Leaps are option trades that you bet on the stock is going to be at in years. So the company is still a juggernaut, but the company right now is taking a lot of its capital and pushing money into making investments for the future. So will Facebook get into the future? Will it get into the metaverse as it comes out with these new headsets and phones? I mean, headsets and a headset and glasses, what I heard Mark Zuckerberg say today. So when I look at it, this company is a juggernaut on the finances. This is not something that Prince Dykes is saying or what he thinks. I'm pulling up the financial data. With a company that's looking like that financially, what would you do? And you've seen it drop 22%. Mr. Quinn said, bye. Mr. Quinn, I hear you out there. He says, bye. I look at it, I think the market overreacted to it, and we will see. Anyway, ladies and gentlemen, boys and girls, I hope y'all guys and girls got something out of this. Make sure you hit that like, subscribe, comment, and share button. Share this with all your friends. Check us out, the Investor Show podcast, YouTube, Instagram, Facebook, Twitch, and also check out my book series, Wesley Learns to Invest. Wesley learns about credit, and Wesley learns about insurance. Available everywhere, hardcover, paperback, ebook, and audiobook. Grab your copy. Give it to your kids, give it to your nieces, sponsor a copy, buy them for your school, buy them for your library, all the other good stuff. All right. But anyway, ladies and gentlemen, boys and girls, and children of all ages, I'm still 110% independent. So 110% independent. Let's make this children's book series go #1, completely independent. I would totally love that. So anyway, let me see what Mr. Quinn said. Mr. Quinn says, thanks. Have a great night. Appreciate you too for tuning in. And the TTW podcast says, great video. Thank you very much, ladies and gentlemen. Thank you for tuning in as well. All right, ladies and gentlemen, boys and girls, into the next video podcast, cartoon, or whatever else crazy y'all see me do around the globe. Y'all already know what my name is. It's Prince Dykes. I'm the Prince of Investing. Peace. Be safe. I'm out. And thank you.